Jerome Powell is crashing the market, or is he? The stock market fell 1% just as the Senate committee testimony just started. Basically, the reason this happened was because Jerome Powell came out and said, hey, things are a little bit hotter than we would like, and we're going to continue to raise rates. And that's what prompted this initial reaction. Take a look at the markets at the moment as I'm recording this. So you can see that there's a little bit more move to the upside on the 5-minute chart here. This is the S&P 500 ETF, or SPY. The news here is that Federal Reserve Chair Jerome Powell stated in his prepared testimony for the Senate Committee on Banking, Housing, and Urban Affairs that the inflationary pressures are higher than anticipated based on the stronger than expected January data. The Federal Reserve plans to increase its federal funds rate target range and continue shrinking its balance sheet. We all knew this, though, guys. This is something that shouldn't come to a shock to anybody. The stock market responded negatively. Nobody should be shocked by that either. Only down 1%, but we can see obviously now it's up only down around a 0.5%. We'll see where it ends today, as there is a lot more to unpack here as the testimony is continuing on today as well as tomorrow. The 10-year Treasury yield also increased by 4 basis points to 4%. And although overall inflation has decreased from its peak in June, core services, which make up over half core consumer expenditures, have not seen any disinflation. This is going to be a term that I think that a lot of us are going to want to look at and anticipate as Jerome Powell continues to give his testimony. Powell did mention that to bring down inflation in this sector, there may be some softening in labor market conditions. And guys, we've really kind of seen this a lot already when it comes to job cuts, specifically in tech. Last night, we just heard from Meta Platforms, aka Facebook, that we were going to see more job cuts from them, potentially in the thousands. And that's also after they've already cut 11,000 jobs from the company. So that'll be something that we continue to see more likely. But this is actually no, there shouldn't be any surprises to anybody. And I'm not surprised, but I still feel very bullish on the market. We take a look at the weekly chart here, and it is still very much intact. Higher lows, higher highs. This is not a bull trap, in my opinion. The last 6 months, we have seen the S&P 500 move in this direction. It has changed its ways as far as the downtrend is concerned. We can go ahead and draw the downtrend here from which started back in December of 21 and see that shift is changing now. We're starting to see an uptrend. I think we are in a bull market. It's well above the 50-week moving average. Obviously, had a hell of a bounce off the 200-week moving average, and things are looking great here for the SPY. I still stand by my stance on a 15 to 20% move in the S&P 500 this year. I don't think there's anything to worry about here. Let me know what you guys think in the comments below. I will be reacting to this even more this afternoon during a live stream at 3:45 p.m. Eastern Time, which I will also be reacting to CrowdStrike's earnings. You're not going to want to miss that. Make sure you subscribe, hit that notification bell. I'll see you guys this afternoon.